Here in Asia, the biggest bank in Europe released its earnings. HSBC beat profit expectations as its wealth business fueled another strong year. The bank posted pre-tax profit of $29.9 billion, topping analyst estimates. CEO Georges Elhedery says 2025 was a year of decisive action as it pushed through sweeping restructurings and an Asia-focused strategy, including taking Hang Seng Bank private. Shares have surged almost 90% since he took over in 2024. Well, joining us now is HSBC CEO himself, Georges Elhedery. Georges, good to have you with us. I mean, a beat pretty much across the board. We have all four businesses doing well, you say. What message would you like shareholders to walk away with?
Thank you very much, Haslinda, for having me. And indeed, we are very pleased with the 2025 results. I think the key message, Haslinda, to take forward is, number one, we are performing, and this performance is delivering good earnings, strong earnings, and is delivering strong growth in all four businesses and all the key indicators that we look at, and strong distributions to our shareholders with the increase of dividend by 14% to 75 cents per dollar. The second key message is that we are transforming with precision, with discipline, and we're doing it at pace, and we expect to be able to conclude a number of the actions we set out to do earlier than initially planned. And the third key takeaway is that we are confident in our ability to meet our upgraded targets, and we're therefore investing for growth to be able to deliver growth. We shared that we expect now for 26, 27, and 28, we've targeted for 26, 27, and 28 revenue growing every year, rising to 5% in 28, and we have targeted a return on tangible equity, excluding notable items, for each of these 3 years of 17% or higher.
But, Georges, there are still some concerns. The Hong Kong and Chinese commercial real estate weighing on your numbers. You book a charge of $700 million. Have you seen the worst, and what are you anticipating? When do you see a turnaround?
So first, Hong Kong remains a structurally high-growth economy, and we have strong conviction in the opportunities available for us in Hong Kong. We have a market leadership position, and we're consolidating our market leadership. I mean, testament to that, as you called out earlier, Haslinda, is the privatization of Hang Seng Bank, which we completed ahead of time. The growth opportunities are multiple. Hong Kong is on track or poised to become the world's largest cross-border wealth hub before the end of the decade. We have a leadership position to capture these opportunities. Hong Kong is a major trading hub and the super connector between the mainland, and the world, and those flows. We have a leadership role in capturing these opportunities. So these underlying structural growth opportunities are real. Insofar the Hong Kong commercial real estate is concerned, we've always believed, and we continue to believe, that this is a cycle. We know this market very well, right? 161 years in this market. If it's a cycle, when we look through the cycle, we are constructive and positive about the medium to long term. We already see signs of normalization in the residential space. We already see some easing because of interest rates coming off and the supply-demand dynamic improving. And we will support our customers in the short term, but we remain constructive of how it will evolve in the medium to long term. Haslinda.
Georges, you're pretty happy with how Hang Seng Bank is going. I'm just wondering whether you're going to use it as a template for future M&As.
So we're very pleased that we completed the privatization of Hang Seng Bank well ahead of plan. And we're now able to communicate to our shareholders what we expect as an upside that we can drive by bringing this privatization forward. So we have now management ambition, and we have comprehensive plans to achieve $0.9 billion of upside, both in terms of synergies or unlock of opportunities enabled by the privatization before the end of 2028. Roughly half driven by cost synergies and related impacts, and the other half related to revenue synergies. On your broader question,
but are you looking at more acquisitions, Georges?
Yeah, so on that broader question about acquisitions, we've set out in February 2025 a high bar, strict criteria, 4 criteria, to define when we go for acquisitions, that we need to meet all those 4 criteria. These criteria are that it is dead on strategy, that it deliver scale or capabilities, that it does not distract us from organic growth, and we have plenty of organic growth opportunities inherent and around our footprint, and that it is more accretive than a share buyback in the way we use our capital. And insofar that an opportunity meets those 4 criteria, then of course we will consider it seriously.
And Georges, of course, since you took over as CEO of the company, you've pretty much focused on restructuring. Are you almost done, or is there still a need for radical changes?
So we're moving at pace. We're moving with precision, with discipline. And we're basically communicated this morning that we are expecting for big parts of this simplification work to be able to deliver it 6 months ahead of plan. In particular, we already have done the leadership reorganization. We already have changed our business setup to reflect our structure, or our structure to reflect our strategy. That's done. All businesses have matured nicely. All have grown their deposits and their revenue. All have generated mid-teens or higher returns. So we're in a good place there. We're moving at pace with the organization simplification saves, and we expect now to have taken all these decisions before June 2026, 6 months ahead of plan. And we're moving at pace insofar that we're looking at our participation choices, exiting of non-strategic or low-returning activities, so we can take out the cost from these areas and reinvest them in those areas where we have competitive edge,
right,
where we're driving high returns, and where we're able to grow. And all of this is moving at pace.
Georges, are you also done with job cuts? And when it comes to headcount and hiring in the future, given where AI is headed, are you re-looking at how you hire the lower level positions in the bank?
So the work we're doing in terms of simplification is focused at simplifying the bank, its processes, its setup. We're not focusing on jobs per se. Jobs is just an outcome insofar that some of these actions are taken. This being said, we remain focused at building a high-performing team. That's culturally very important for our customers who expect the best from us. We remain focused at hiring, attracting, and at retaining top talent, and we do so in various ways. To make sure that we have also the right talent for the future. We do so by also providing training and skilling opportunities to ensure that our workforce is as future-proof and as resilient to the future challenges as possible. In particular, training around AI and making availability at scale to all our colleagues of various AI tools, generative AI tools, to allow them to upskill and remain very, very future-ready and able to be productive and perform in the world of the future.
And Georges, we've been talking about how the bank has done well. Its bonus pool is now up by about 10%. But we also know that some of your bankers will be receiving either reduced or no bonus at all. I'm just wondering what the compensation structure you're looking at in the future.
So our compensation, Haslinda, has to be fair and has to be competitive, but equally has to be differentiated to reflect talent and talent contribution and performance. And we expect this differentiation to continue as we embed the high-performance culture at HSBC. And we expect, therefore, with this compensation structure, to be able, as I said earlier, to attract, to hire, and to retain talent, as we serve our customers and move into the future.
Georges, just before you go, the biggest risk for HSBC in the next 12, 24 months?
Well, I think, Haslinda, I may turn the question. We are facing a lot of challenges and uncertainties. The world is evolving fast on a number of areas, be it on technology, be it on tariffs and other, kind of geoeconomic matters. I think we are navigating this from a position of strength. We're bringing financial strength. We're bringing expertise. And the important thing here is to reflect on how we look at the future. We have targeted revenue growing every year for 26, 27, 28, and rising to 5% in 28. And we have targeted to generate a 17% or better return on tangible equity, excluding notable item. And part of what gives us confidence is all the work we have been doing, having proven we can grow, having proven we can generate 17% or more return with a 17.2% return on tangible equity in 25, excluding notable items. Putting investments in those areas that will generate growth and accretive returns to our shareholders and make us more meaningful for our customers, and the footprint on which we are, which is a tremendous structural growth opportunity footprint, where we're able to leverage a leadership position and capture these growth opportunities.
Georges, where do you see the need to invest to capture the growth that you're talking about?
The way we set ourselves up, Haslinda, reflects all the areas where we believe growth opportunity is real and we are investing. I can call out wealth, Asia and the Middle East. We are the powerhouse of Asia and the Middle East. We're a leader in wealth management in Asia and the Middle East. It's an underlying intrinsically high growth market. We're investing to capture this intrinsic structural growth and to gain market share in the space. If you look at transaction banking, our capabilities are tremendous. They connect the world in a way, unparalleled to the service of our customers. In particular, we are able to capture the intra-Asia and Middle East reconfiguration of supply chains and growth and investment corridors, the vibrancy around these corridors. And our position there is a powerhouse, means any investment will allow us to consolidate and cement this powerhouse position. Even if you look at the UK, Haslinda, we have seen the highest loan growth of all businesses in the UK, and we've seen the highest loan growth in the UK than any year the last few years. So it's a very encouraging development that we're seeing as an area where we can continue to invest to capture some of this available growth. Our businesses are built on strong foundations and geared for growth.
It's hard to talk about the future without talking about AI. And how do you see AI playing a role, or the challenges that AI brings for the bank?
So AI will be Gen AI in particular is going to be a major transformation in the way we conduct business. But our operating model is resilient and is going to allow us to leverage AI to the benefit of our customers. So Haslinda, we're driving AI through three different work streams. The first one is we're diffusing AI and deploying it to all our colleagues. So every one of our colleagues can improve and augment their own capabilities, become more productive, better outcomes to their colleagues and the customers they serve. We're giving them coding assistance, we're giving them training, and this is really to future-proof all our colleagues that we want for the future. Yes.
Will AI impact entry-level hiring?
So, Haslinda, we have not changed our entry-level hiring, and we still expect to hire about 1,500 to 1,600 graduates this year. Of course, we'll be looking at skills that are going to be helping us in the future, but we believe the accountability of everything we do remains with humans. We believe in strong controls. We believe in strong resilience. We believe in our ability to audit everything we're doing. And that human judgment, I don't see it as being replaced in the short term.
Georges, thank you so much for your time. We appreciate it. Georges Elhedery, CEO at HSBC. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. President Trump delivered a State of the Union address declaring the U.S. is back, bigger, better, richer, and stronger than ever before, and thanked his trade tariffs for that comeback.
One of the primary reasons for our country's stunning economic turnaround, the biggest in history, where the Dow Jones broke 50,000 4 years ahead of schedule, and the S&P hit 7,000, where it wasn't supposed to do it for many years, were tariffs. I used these tariffs, took in hundreds of billions of dollars to make great deals for our country, both economically and on a national security basis.
Let's get to Bloomberg Politics editor Laura Davison. Laura, huge proclamations on his achievements. What were some of the key takeaways?
Yeah, the key takeaways here is that Trump is committed to tariffs. He basically told a room full of members of Congress that he wasn't going to rely on them to enact his tariff agenda. He was going to go ahead and do it on his own. He said it will be more complex, but acknowledged that maybe it will be better if he goes this more legal route than what he had pursued previously. There was nothing in this speech. He didn't have a lot of domestic policy proposals going forward. This is a speech that Republican allies were hoping would really set the tone for the midterms, particularly as the economic mood is souring within the U.S. But the only thing he really brought up was sort of a plan to, add $1,000 worth of savings to some workers' retirement plans. This is actually something that was passed under his predecessor, Joe Biden, and is not something they have to do. So there was not a lot for Republicans to run on come November.
And also when it comes to foreign policy, he talked about Iran, he talked about ending 8 wars. But this is a president who promised not to make the U.S. a policeman of the world. And here we are talking about possibly, the U.S. being on the cusp of a war with Iran.
Yes, he, acknowledged, he sort of split this line saying he wanted Iran to make a deal, but also thought that it was possible that the U.S. could pursue some of these strikes. We saw him spend a lot of time talking about how excited he was about how the operation in Venezuela went just a couple months ago. We've seen him kind of, use those two in tandem, sort of citing, look, we've done this before, we could do this again when it comes to Iran. Experts have said it would be much more difficult. Iran would be a much more grand scale operation and may not have the certainty of success that Venezuela did, but that is something that Trump is clearly thinking about headed into in the coming days and weeks.
Laura Davison, we thank you so much for that. Of course, Hong Kong out with its budget today. Some of the lines coming out from that budget is forecasting 2026 GDP growth of 2.5% to 3.5%, is also eyeing the gold trading as well as family office incentives. Hong Kong, of course, wants to be the hub of family offices. It is setting up funds in the city. And the other thing as well, Hong Kong, again, attracting more family offices. It's setting a fund for that. And of course, it is pretty upbeat about its growth going forward. It will enhance its tax regime to attract more family offices, and the funds will be set up according to Financial Secretary Paul Chan, and he will expand the scope of fund to cover specific funds of one, as well as classifying digital assets, precious metals, specified commodities as qualifying investments eligible for tax concessions. Of course, we'll delve deeper into that budget in the coming days. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.